On today's episode of the Profit First for Tradies podcast, I would love to talk to you about the 8 mistakes that we see people make when they're implementing Profit First, so you can avoid them. So mistake number 1, going it alone. Now, as entrepreneurs and business owners, this is something that we are very used to doing, just figuring it out ourselves, getting there and get it done. It'll work out eventually. But it is the biggest mistake that we see because people tend to get a little bit off path and then they waste so much time and energy in Profit First or attempting to implement Profit First, but they're on the wrong track. So we want to make sure that you stay on the right track and implement Profit First in the most easy and simplest way possible. And the easiest way to do that is to put your hand out and reach out to a certified Profit First professional such as myself to help you get your plan to implement your Profit First in your business. Because remember, Profit First is a customized cash management system specifically for you and your business, and it's unique in the way that we customize it to make sure that it works best for you and your business. Mistake number 2, too much too soon. What I see a lot of entrepreneurs and business owners do is they jump in and start at the TAPs, so the target allocated percentages. So they start trying to put away the percentage amounts for each of the different bank accounts that is actually their target. And that will never work because keep in mind your business needs some work from a cash management perspective, and that's what installing Profit First in your business will help you do. But what we need to do is start slow and steady. We need to start where we are, and we need to gradually make changes in our business to be able to reach our TAPs, our targets. So we need to start with our current allocated percentages, and we get those by doing an instant assessment, which I'll talk about in an upcoming podcast. So don't go too hard too soon. Don't do too much too soon. Small steps is how you implement Profit First successfully. Mistake number 3, you choose to grow first and I'll worry about profit later. You can't put profit aside and grow. I need to reinvest all the money back into my business. A common comments that we hear all the time. But in fact, that is not correct. We need to make sure if growth in your business is your goal, that we do it in a really sustainable way and a really profitable way, and making sure that you have really clear goals and objectives around what that growth looks like. Because what we see so often is people grow and then they grow in the wrong way, or they grow too fast, or they grow and they forget about managing their cash, and they end up being in a very difficult situation because they've run out of cash. They have all these opportunities, but they don't have the cash to back them up. So implementing Profit First in your business will absolutely help you grow sustainably, rather than just grow through a lot of stress and worry and end up with a very small bank account. So mistake number 4, cutting the wrong costs. So doing an expense review is a really key part of the Profit First process, and it's one of my favorite parts, although I do say about every part in the Profit First process. But what I see people do, and the mistake I see people make, is they go in and they just cut all these expenses out of their business, which can be detrimental to the business, because if you're cutting things out of the business that are required for you to run your business, then that's obviously not going to work for you. So when you're doing your expense review, I always like to say we want to come at it from a point where we're just looking at what is unnecessary to start with. What can we just get rid of? Is there any subscriptions, insurance policies, things that are crept in that you actually just don't need to spend money on? Is there anything that we can replace? Are we getting charged too much for various things? Can we replace some insurance policies, or can we replace some suppliers or materials or those sorts of things? And then what is left should be what we need to make a profit. Now, keep in mind what you need to make a profit. We can also review those expenses, but just make sure, like anything when we're implementing Profit First, slow and steady wins the race here. Let's not dive in and, reduce our expenses by half if that's going to have an adverse effect on how we run our business. But in saying that as well, don't just cut one or two things and say, oh, I've done an expense review. That's not how it works. Mistake number 5 is plowing back and reinvesting. This happens a lot when we're growing or when we're initially in our business, that we often hear that we've got to put all the money back into the business. We're not taking a wage, or we're taking a very little wage because we're putting the money back into the business so we can get to a certain point. The problem with that is your business is not sustainable in that way. And we see it time and time again that what happens is we're just going to do it for a couple of months, for 6 months, for a year, for a couple of years. And all of a sudden you're 5-10 years down the track and you're still taking a very little wage, or you're not making any profit, and you've gotten into that habit. So we want to start off on the right foot and make sure that we are not getting into that habit of just justifying to ourselves that we've got to put this money back in to be able to get to the next phase of the business. We absolutely can plan and strategize around what money we need for the future of the business. But again, we need to make sure we have really clear and specific goals and purposes for that process, so we don't end up, as I said, down the track 3, 5, 10 years and still doing the same thing. Mistake number 6, raiding the tax account. Now, this is a very easy one to raid because quite often it's not due, depending on what sort of tax, for 3 months, sometimes even in 12 months' time. And it's very easy to use the money that needs to be put aside for tax for other things to get you by, and then you worry about that tax bill when it comes in. And then we defer the tax bill, and then we get a payment plan, and then we end up on this cycle of constantly trying to chase our tail. So we want to make sure that we are putting money aside for your tax and that we are not touching it. Touching it will only give you a short-term solution, and it will give you a lot of long-term pain. With Profit First, we want to solve the problems now, or put in systems and processes now to be able to make sure that you're not going to have issues down the track. So do not steal from your tax account, your GST account. If you're putting money aside for superannuation, do not steal from that. If you need to, that is an indication that your business needs some work and needs some focus around the financial side of your business. Now, mistake number 7 that I see happen when people implement Profit First themselves is that they make it really complicated, and much more complicated than they need it to be. One of the biggest pieces of feedback I get when I chat to somebody who has tried to implement it themselves is that it is much simpler than they had made it. And that, as humans, we tend to overcomplicate things just by default. So if it's not working, if you're using Profit First in your business and it's not quite working, this may be a mistake that you are making as well. So please make sure you reach out and we can have a chat through where you need to start and what you need to do to make sure that it is as simple as possible. Now, our final common mistake that we see, number 8. So skipping bank accounts, or skipping certain bank accounts. Some people try to simplify it so they have a bank account that has multiple things in it. So rather than splitting out their operating expenses account, they've got operating in tax, for example, or they've got operating in owner's pay. Now, the whole purpose of Profit First, and the way to make it really simple and easy, is to have multiple bank accounts for multiple purposes. So it's really easy for you to look at your bank accounts and know, have you got money for certain things? So is there enough money in your GST account to pay your GST bill? Is there enough money in your tax bill to pay your tax bill? Is there enough money in your owner's pay to make sure that you take your wage? Have you got your profit account set aside? Do you have your operating expenses account? And by combining the accounts, you're actually making it more complicated. Having more bank accounts is actually simpler. Now, from a bookkeeping perspective, if the transfers are not done correctly, this can end up a right mess. But in another podcast, I will go through and explain to you exactly how we do it with our clients. So running Profit First in your business should literally add no more than a minute's worth of reconciling every week. If it's taking you longer than that, or you yourself or your bookkeeper or your accountant is complaining that your bookkeeping has increased because of Profit First, we need to have a look at that, because that's absolutely not the case. So they're my top 8 mistakes that we see often when people implement Profit First themselves. If you have implemented Profit First yourself and have any or maybe more of those mistakes, then please check out the link below, get in contact, and we can have a chat. See you on the next podcast.